Hello, everyone, and welcome to the podcast. This is Kisa Shreen. My guests today are Matteo Carbone and Will Bielert. Matteo is founder and director of the IoT Insurance Observatory, where he advises many international insurance companies on setting up industrial and commercial plans, growth strategy, and digital strategy development. Before creating the IoT Insurance Observatory, he spent 11 years in Bain & Company's financial services practice. Will is a sustainable energy investor as well as the chief digital officer for Premier Tech, a Canadian company that focuses on agricultural production, plant automation, and water purification. Thank you both for joining us today.
It's a pleasure.
It's a pleasure. Thank you.
So insurance, I feel, is one of the first financial services products that people tend to learn about. I was sharing with Matteo that I remember my great-grandmother would talk about having an insurance representative come to her home, which was eons ago, clearly. But just wondering if we could just start talking about the changes in the tech industry over the last several years, specifically as it relates to connectedness and IoT. What do some of those changes look like?
Let's say this is something that is the core of the path of my career. So the insurance sector has been considered pretty conservative for many years, but it's not so true. So you have many insurers that around the world have experimented the way to use connected data, so data that come from a car, data that come from a wearable, or data that come from a connected house, in order to improve the way they assess, manage, and transfer risks. So the best practices have been able to move from superficial usage of the innovation, so from the toys for CEOs, the shining devices, the gadget, to a real usage of data in their core processes. So you have examples of insurers that have been able to nudge their clients to become less risky. Insurers that have been able to use the data in order to manage better the claims, so providing a better user experience to their clients and avoiding frauds. Other insurers that are avoiding bad things from happening, so prevention and mitigation. All opportunities that generate concrete business outcomes. So they are focalizing their innovation effort on something that is concrete.
So just taking just one of those, you presented us with many different use cases there. So taking one of those, which is using data to prevent risk or using data to understand what risk lies ahead of an entity or a person. One of the things that we know is that with climate change, I would assume the insurance company has had a lot of change because of that phenomena, particularly how data can be used to perhaps understand what the effects of climate change could be for a potential entity. And I would love, Will, if you could talk about insurance in context of climate change and then adding on the layer of data, and just how can data help improve an experience as it relates to understanding potential climate change issues and how to avoid those issues?
Sure. So first of all, we really see increased risk because of climate change in many ways. And what's the difference between our history and our current status is that nowadays we have a lot of devices, and these devices collect data, and we can use this data in many ways to prevent certain risk and to mitigate this risk. So, for example, we can now pull together if a thunderstorm arrives and we are a company which produces electricity, we can now forecast which kind of our production centers will be hit by the thunderstorm, so we can already plan how do we mitigate it. And this is the difference because now we have all this data and we can learn much more about the essence of certain elements, about certain incidents, why they are happening. And in the past, it was just not possible because we had humans taking notes, but we could not really understand the underlying reasoning. And that's really no difference. And that has certain effects. One effect is that the damage caused through climate change events I assume, will increase for a lot of different reasons. So there is for sure room for improvement of efficiency. So by using this data, insurance companies can mitigate some of the increase of the price for the insurance. That's it. On the other hand, there will be also, for sure, because of the higher damage, some portion where insurance companies will be forced to apply their knowledge on other areas. And another interesting area is really everything where there is an output created, like a production unit, so that you can forecast an output, let's say a result for daily production of certain kind of food, and then really apply the knowledge you have, and first of all, really ensure that this output will happen certain restrictions, and then secondly, really use your insurance knowledge, as Matteo already pointed out, to improve the situation and to change the role more from a company paying for a certain damage to a company which is proactive and sells some peace of mind to their users to really improve the overall situation while creating something good for both stakeholders, the insurance company and the client, and then for the environment as well.
So to take that as a use case, if I'm building a building, an office or something of the sort, and I'm a company, I could understand this particular slice of land perhaps would contain X amount of risk if I chose to build here, if I chose to plant here. Is that something that you think that insurance companies will be able to advise on?
For sure. I mean, for sure, we can understand this risk better, and if I insure these building complexes, for sure I can use certain data, and then also I can use certain sensors in the building to mitigate certain risks. Let's make a concrete example of fire risk. Now, in terms of sensors, I can really buy these sensors, and the cost of data processing costs a fraction compared to history, and therefore there is a situation where by just collecting the data and assessing the risk better, the price, the cost for insuring the risk will have also some room for improvement.
Right.
If you consider the use case mentioned before about the potential benefit the insurance sector can generate adding sensors on an equipment. So on one side, you are, as an insurer, advising your client about predictive maintenance thanks to the data. These lower one of your risks, equipment breakdown. These allow your client to do better his daily activity. He become more productive. So you are providing, together with the insurance coverage, a service. But on some equipments, the same sensors allow you to obtain insights that allow to optimize the energy consumption. I was discussing yesterday with a tech player that work on retails, on grocery stores, how sensors on refrigerators allow to save 20-30% of the energy consumption. So this generates an extremely relevant positive externality to the society. So it's not only about the impact on your P&L as an insurer, it's not only about the impact on the P&L of your clients, but you are also generating a positive externality to the whole society.
So we're looking at the insurance industry broadly, and I want to look at some of these smaller players. You mentioned that you spoke with one of the players yesterday, and disruption that might be happening in the industry. If I'm an institutional investor or even an accredited investor or even a retail investor who's interested in getting into the game in terms of investing in the insurance industry, where should I focus my attention in terms of disruption, in terms of new entrants? What does that field look like?
Let's say I have a slightly different perspective from where you can invest on is on the players that enable incumbents more than on the disruption. I'm biased on this because I'm an advisor of incumbents. So I love incumbents. I know many of them that are doing really well. So I think that I can leverage to provide you a framework that can help investors to choose one of the key theses of a book I wrote a couple of years ago on Insurtech that as a title, all the insurance players will be Insurtech. That provocative title was focused on the fact that I believe that all the players that who will survive in the insurance sector will use data and technology, so Insurtech, as key enabler of their strategy, of their actions. It's a pity today not to leverage the last technologies, the data, to do better the core insurance activity, assess, manage, and transfer risks. A couple of years ago, before writing this book, I developed a framework to evaluate all the Insurtech initiatives that classify them on the performance they can deliver on 4 axes. One is the productivity, so if a solution allows to sell more. The second is proximity, if a solution allows you to be more close with your clients, so to generate new knowledge, the opportunity to create new products. Third is profitability, so if some way impact the core insurance process, pricing, claims management, and last, persistency. If something allows you to have an increase of persistency on the relation with your clients, so to increase the loyalty. So when an Insurtech solution allows to perform better on these 4 axes, is an Insurtech solution that deserves investments. When is a gadget that doesn't impact any way that 4 axes, is what I call a toy for CEOs. It's good to go on the stage of a conference and say, I have a great Alexa skill, but doesn't impact really your business.
Mm-hmm. And I totally agree with Matteo. And just to add, what the insurance companies have as a very strong asset is really the relationship with the client. Mm-hmm. So they have millions and millions of long-term relationship with the client. So a lot of trust has been established. Some discussion whether they are maybe not quick enough, or maybe outside players bring pressure, like to sell insurance online was a big discussion, and to be more price competitive. But I think they all now develop some form of strategy, and it's more like that external player come with a technology idea, and then it's for them the time to evaluate whether they should either cooperate with them by just buying in their services, or whether they should maybe buy this company. So it's a different game, and we see already very interesting examples in the so-called IoT, in the industrial Internet of Things space, where large players they watch out for good ideas, and then they integrate these good ideas. A good public example is the acquisition of a company called Bielert by Munich Re. Munich Re being a very large insurance company in Europe, where Munich Re, at least that's my private opinion of that transaction, saw the use and the knowledge someone can generate by integrating IoT data into an insurance product, and then the consequence was to integrate this company and to leverage the knowledge for existing insurance products. I don't see, but I don't have the knowledge. Kind of a unicorn appearing like a Facebook or Google. I think it's very different. You need to have this trustful relationship for a very long time, and I think it will be more a B2B play, where the insurance companies needs to understand on a continuous basis the valuable technology, to pick the right bet and to integrate this technology into their products.
And that sounds like it's going to be a global phenomenon. So if we're looking at, to your point, Will, which companies are going to begin cooperating or buying the smaller companies, where is that happening? It doesn't sound like that's regional. Is that the case? Is this really a global field that we're talking about?
Definitely. I think that we have seen in the past, talking about the Insurtech investments, we have seen in the past few years many incumbents invest relevant amount of money in players that can allow them to innovate. On the side of the IoT Insurance Observatory that you mentioned, last year I co-founded a special purpose acquisition company that in Italy has acquired an existing small carrier, Net Insurance, and is using this traditional carrier to create an innovative platform that will sell insurance through banks. We have already 3 bank assurance agreements. I'm not operative in the company. I'm only in the board of directors. And this player has already invested in a few Insurtech players that are allowed to innovate some steps in the value chain, has partnered with others. And together with some tech player, built internally a few tech tools. So the point is you can calibrate your strategy between buy, partner, and develop. But today is concrete the opportunity to do better your core processes leveraging technology.
So in terms of bringing us to a close here, what do you think is the big idea? What do you see coming down the road as it relates to insurance and sustainability in 2020 and beyond that we won't see coming, that you think is going to really take the marketplace by surprise? We talked a bit about how the insurance company using data can really set the stage for future improvements. I'm looking for other sorts of things that are big new ideas that you think will be happening with insurance and sustainability in the near term.
Let's say today, during this podcast, probably you have heard something that is extremely innovative, and there are around 30, 40 people around the world that have cleared this opportunity, that is the usage of IoT data in the commercial lines, on the industrial risks, on agriculture. So this is a trend that is at its infancy. If you talk with a normal executive in the insurance sector, so not someone that is on the frontier of innovation, and you mention them IoT, they think about auto telematics on personal line. Because this is something that is material. There are millions of policies around the world that already use that data. The usage of this data on commercial lines is at its infancy. So I think that that kind of usage that allow you to change the behavior of business owners in order to reduce their risks and to generate positive externalities, the prevention that allow to reduce energy consumption, are all use cases that are extremely innovative.
I couldn't agree more, and it's really also new because you need to have new partners for acquiring the domain knowledge. So very often insurance is very good in applying insurance knowledge, but then all of a sudden, as Matteo just described, you need knowledge how a machine is functioning. You need really very strong knowledge about certain domains, so you need to partner. So I totally agree. I think new products will arrive where these two competences can blend together and create really something new. I think it will not be a surprise. It will more go step by step as it went through the last years. But for sure, there's an opportunity to create new products through this use of IoT data.
Great. So we have it here. Data usage is really at its infancy as it relates to really changing users' behavior and reducing risk. And also partnerships is really where we're going to go into the future, knowing and understanding which partners can take you into certain domains and really which partners can help you create something new. Will and Matteo, this has been great. Thank you so much for joining us.
Thank you for the extremely interesting discussion.
Thank you very much.
Great.